What's up, CTRM shareholders and moneymakers? Welcome back to the channel. We are going to talk about Castor Maritime Inc., one of our favorite stock, which is trading at $1.33. Many of you asked me whether will it go to $2 or will it go to $1. Now, when I don't really have a crystal ball, what I can do is the best thing I'm good at: due diligence, research, and analysis. And I like to share with you what I found. So stick to the video, watch out. We'll talk about whether it's still a good investment. Is Castor Maritime Inc., is CTRM still a good investment or not? It is trading on NASDAQ. Will go back to $2 or will it go to $1? Let's talk about all that juicy and important information. Now, before I go ahead, I wanted to say that not only Castor Maritime Inc., take a look, 5 days it's down 13.64%. 1 month it's down 31%. 6 months it is down 13%. So more or less it's trading around the same along the same lines for last 6 months. Year to date the stock is also 13% down. So it's pretty much $1.60, $1.50, 40 cents, so on and so forth. We had seen the run up for CTRM from $1.60, $1.55 to 87 cents spike, which is up 57%. Will it go back to $2.40 that we saw in April 2022? Or will it go to $1 or potentially below $1? Let's talk about all that. All I ask you in return is to just hit that like button, subscribe to the channel, and turn on the notification bell. If today is your great day, click on the thanks button on YouTube and you can help out the channel. I'll greatly appreciate all your help, support in growth of this channel. I'm not a financial advisor, nor am a certified professional. I do a lot of research, and this is my way to giving back to community so you can also make informed financial decision. This company became a $125 million company. By the way, we need at least 150 likes on CTRM so we can share this information with more and more people. We'll be doing some analysis on what the Q2 results benefit should look like, whether it's a buy or a sell. Based on this article from Henrik Alex, it does seem like the stock is buy, at least based on the author. I'll be reviewing this article, sharing my own thoughts, research, and analysis on the top as well, and let's talk about it. So don't miss out. Hit that like button. Write down in the comment section below if you still own CTRM and where do you think it can go. Now, if you take a look once again, going back to our market cap, $125 million revenue, market cap company. Such a big company. The company started in 2017. Let's take a look right here. 2017 founded. What the company does, let me talk to you a little bit before we go ahead and take a look into the revenue, because the company spiked up so fast. So if you take a look, March 2021, so Q1 2021, we were only 7 million in revenue, more or less. March 2022, just within 1 year, we are $55 million in revenue. However, our operating expense, $9.46 or $9.46 million, I'm sorry, but all in all, what you want to get at is the company has grown so far, so great, and this is a cash-savvy business, and I'll talk to you about what do they do. They are committed to promoting the honest and ethical business conduct throughout their operations. Basically, they're a growth-oriented global shipping company. Now, if you think about shipping companies, they're cash-savvy, cash-heavy business. It's pile of cash. They need a lot of cash to grow their business, especially when we saw pandemic, the company did not stop. I have been following this company before since they had less than 5 vehicles or vessels. Right now, they have more than 29 vessels, give or take. And we'll look into what vessels do they have, what the valuation is, what the company has cash in terms of cash on hand, and where the stock can go. By the way, they are engaged in seaborne transportation with wide range of commodities along worldwide shipping routes through their ownership of dry bulk and tanker vessels. When I started following this company, they only had dry bulk vessels, and then they added tanker vessels which could potentially be the right move that we see right after a couple of years of watching the company grow. So if you see right here in 2017, this is a nice chart that I like to share with you. They started here, so it's a 2 or 3 last couple of years I wanted to go through pretty quickly, but take a look right here. Nasdaq, and it is under the ticker symbol CTRM, started in 2019 February, and guess what? Right after that, we saw the pandemic that we already know, which impacted the business. But they took the delivery of their Magic Sun vessel, moving on to more and more vessel. And they created a ton more debt for the company, which, by the way, suffered in terms of the stock price. But it is starting to pay off because now the company started generating massive amounts of revenue, 10x revenue than what they used to do in 2019, if I remember correctly. So fast forward to January 2022, they took the ownership of the Magic Callisto, Callisto, that is the last vessel that they took the ownership of. Now, this is a strong community-driven stock. Take a look, 86,000, more than 86,000 watchers on stock tweets. And this stock was hammered hard when if you remember the short squeeze that we started experiencing in AMC, GME, so on and so forth. So this stock turned out to be a pretty popular stock, became a meme stock. Many, including Robinhood, it also impacted. They had to block this stock as well, along with AMC, GME, and became a pretty popular stock, as you can see right here. Now, what happened? Many people are still believing pretty strongly that the CTRMs, the stock will grow. Do not worry. And what can happen? We had seen the reverse stock split as well, because the stock wants to be about $1. And that's why I'm talking about whether we'll go to $1 or under $1, below $1, or it will hit $2. In my opinion, the time will say, but as you already know, that Nasdaq in general has suffered a lot. So did the other stock markets. Also, the cryptocurrency that we were hoping the hedge against the stock market did not really happen. Stock market went down, crypto went down as well. If you know Bitcoin, it is right now at 19,000 US dollars, which is kind of a very not so good situation. But once again, going back, the revenue jumped up 55 million, pretty close to. Now, if they do ton more revenue in Q2, that is going to be a win-win situation, which is what this article talks about. This article just came before a couple of weeks. Castor Maritime tanker exposure should benefit Q2 results, and the author is giving it a buy rating. This is on Seeking Alpha. This is not me, but I want to share this information with you. Castor Maritime reports the respectable first quarter results. We already talked about it. Tanker exposure should benefit Q2 earnings substantially because the business started growing, tankers started growing, and there is no pandemic restriction, or at least the less pandemic restriction than last year. And at the same time, what company did? Castor Maritime started buying vessels left and right. Now they're in the business, and right now they're going to book more revenue. If they book more revenue and if their operation costs are low, they're going to have more and more in terms of the income. Updating the net asset value estimate, company continues to trade at a large discount to the net asset value NAV, as investor remains wary of potential further dilution. Now, there is a dilution that happened a couple of times, more than a couple of times, pretty bad, that shook the investors for the most part, because the stock almost went below $1 and stayed there. They did not really get Nasdaq's compliance, and then they had to do the reverse split. On top of that, the company also started buying more and more vessels, which means they needed more cash. They had to raise capital, and that came with a large stock dilution. So that's why this author is talking about the investors remains wary of potential further dilution and related to partly dealing as well. Unlike most of its peers, despite of plenty liquidity, Castor Maritime is not paying a dividend, which is kind of a drawback, which is kind of a cons on this particular stock. For many other shipping companies, they pay a small, even more than zero is and anything more than zero is good, but they pay small dividend. With the recent tailwind from the company's tanker exposure, substantially improved dry bulk charter rates anticipated for the second half of the year, I'm keeping my buy rating. That's what the author talks about, and for the shares at the moment. And as you know that the stock suffered in last few weeks, more or less went down 31%. Could be a great price point and can go back. It can be 2x once again if it goes back to $2.40. That's when you think that it turned 2x from the current price point. Now, despite of Q1 traditionally being the weakest quarter of the year, the rates for the smaller vessels class held up because of, if you think last year, definitely there was pandemic impact, thus resulting the company into the EBITDA of 27.9 million and 13.1 million cash flow from the operations that we already talked about. While the time of charter TCE rate does not really look great, let's take a look at what the company is up to. The company's tanker exposure should benefit Q2 results, with the Russian assault on Ukraine has caused the charter rates rally in the recent month, which is a direct benefit to CTRM because they are going to get benefit in terms of the rate spike that we have seen. Castor Maritime in January refinanced 5 dry bulk vessels with a European bank at the rate of 3.15%. Net proceeds 54.3 million US dollars. At the end of Q1, company's cash balance sheet was 84 million US dollars, which is substantial money. Now let's take a look how much this company at the moment. Market cap 125 million and they have 84 million dollars in cash. Net debt is 70.5 million, 12% of their estimated fleet value of 584 million US dollars. Now, as I just mentioned, all these vehicles are listed, their year of build, what's the size of that is, what type is that, whether it's a tanker vessel or it's a dry bulk carrier, an estimated value, which accounts for 584 million US dollars. The company just started in 2017. This is fascinating. This is amazing, looking pretty good. Yes, it's risk versus reward, but you want to look into it because if you're holding this stock for a long period of time, they are going to prove that because now the revenue is going to spike up and we'll see what happens in the next few quarters. In late March, the company reduced the maximum amount under its ongoing ATM program or common stock offering program with Maxim LLC, as you already know, from 300 million to 150 million. So far 2022, they have not utilized the ATM program, which is currently scheduled to expire next week, but likely to be extended or replaced soon. Last month, the company sold 20-year-old tanker, gross proceeds 13.15 million. Transaction will result into approximately 3.8 million gain, which should be recorded for this quarter. So the company is going to get money out of it as well as a positive cash flow. Reported Castor Maritime net asset value 84 million. Assets that they have in terms of vessel 584. Acquisition payments, nothing. Long-term debt 154 million. But you know that where the money is in the vessel right now. So it's not like it's vapored into the thin air. Now they have vessels, they have the property, and it's a tangible property that you can think about. Net asset value 513 million, shares outstanding, which is 94.6 million. Net asset value per share $5.43. Now, why Castor Maritime continues to trade at a large discount that the author thinks? Because they have discussed the ATM overhang. The company is not paying dividend at the moment like its peers. Their CEO, CFO, and chairman retaining full control of the company via supervising and super voting preferred shares. Company controlled by CEO's sister responsible for technical management of Castor Maritime's fleet, and the company is controlled by the CEO providing commercial management for Castor Maritime. What is the bottom line? According to the author, again, Hendrik Alex, Castor Maritime shares appear inexpensive for good reasons as investors remain worried potential for further dilution related to party dealings. Now, in addition, unlike most of its peer, the balance sheet and plenty of liquidity that we already talked about, its companies not paying any dividends, so on and so forth. All in all, the author is keeping their buy rating for the shares at the moment. So we talked about all that. We also talked about what the community is thinking right now. The community, strong community, 80,000 plus watchers on stock tweets. If you take a look at the way they are trading, 1.1 million was the volume on Friday compared to their average volume of 1.9. If you take a look right here, 1.9, we see a very low volume, whereas the stock is pretty consistent between $1.20 and $1.50. So if you take a look right here, 151, 147, it went to 137, and it went as low as 133, 132, 131 in last few days. Now, will it go to $2? If the market condition improves, small caps would be the first one to ramp back up because they were hammered the most. If you take a look and if I scroll down, you should be able to see that we went to $2.45 just in April. We're not too long ago, just before a couple of months, we started seeing the downturn because the market was all red. We saw the turbulence into the market. We saw that the inflation started going up more than we anticipated. Fed started rising the rates as well. Due to all this, we went back up. If you take a look at right here, the green chart shows the moving average. The moving average is $1.80. This is CTRM right now trading at $1.33. With the moving average of $1.80, right now we are at $1.34. Now, if the market condition improves, you see that it used to trade above the moving average and suddenly it went down. So I have no doubt if the market condition improves, if the volume improves, and if there is strong Q2 earning results, it is going back above $2 as we saw back in the days. I don't believe that unless they do dilution, the stock will go below $1, but the company is going to be very careful because they had seen in the past that they got Nasdaq's compliance notices a couple of times. They had to get the extensions as well. They had to reverse split, so on and so forth. So in my opinion, we should be seeing $2. Again, I'm not a financial advisor. I do not have a crystal ball. Do your own due diligence. This is not an advice to buy or sell CTRM or any other stock that we talk on this channel, but this is what I believe. Thanks for watching. Don't forget to smash the like button, subscribe to the channel. If you're feeling extra happy, click the join button or thanks button on YouTube. I'll see you in the next video. Thanks for watching.